Hey, we're almost getting ready to start. Got to wait for that 10th chime. London time here. Okay, I want to welcome everybody to Compound Stock Earnings, the CSE Investment Show podcast. And it's Thursday, and it's the 8th, February the 8th, 2018. And we are minus one person today. In we're minus Dirk, he's out of town, but we're minus Keith. Will not be with us. I guess he froze to death up there with his great big ears, his great big earphones on. Couple of interesting things. We were talking right before Randy signed on about the college student who is upset because she was was told by the airline she had to flush her therapy mini hamster down the toilet because they wouldn't let it on the airplane. Anyhow, that's another issue. This Wells Fargo, the one I labeled the criminal enterprise, it just gets worse. And the reason I want to talk about this is, remember, we got this fiduciary rule thing. It's been going on for a year now. And between all the brokerage houses and the mutual funds and everybody, the SEC, they can't do anything because they don't have any ethics to start with. So it's difficult to deal with fiduciary rule. But right before Janet Ellen retired the other day, and I'll just read this off the email I got. After markets closed on her final working day in office, Federal Reserve Chair Janet Yellen delivered a blow to one of the nation's largest banks, Wells Fargo and Company. They won't be allowed to grow until it cleans up. The Fed official said that the San Francisco-based lender's pattern of consumer abuses, compliance lapses, call for an unprecedented sanction. So unprecedented that this is akin to the last scene in The Godfather. And then they give the link to that scene on YouTube. I did not look at it, but that's now, and they're big. They got a building right here a couple blocks away in downtown Fort Worth, 3540, all beautiful, clean, Wells Fargo on it. I'm going to go by this afternoon when I go to lunch and hang a little sign, Criminal Enterprise, on the outside. I think that'll get their attention. The other thing is, obviously, when I mentioned about the market, and we're going to have our folks on here today, Randy and Cezanne and Joni, mention how crazy it's been, totally insane. I think on Tuesday, and I can't quote this exactly, but I read where the markets changed directions like 25 or 32 times or something like that just on Tuesday. And I think it's much better today, but we'll get a comment from the people that are out there every day, from our folks today. But it's interesting market, interesting times, and one of the reasons you should be dealing with compound stock earnings techniques, because compound stock earnings techniques afford you the ability to manage things. We're not buying stock with anticipation, but only one thing that has to go up in value for us to get out for a profit. We're treating stock like it's a piece of real estate, and we're going to make money no matter which way it goes. And that's what we do. And we've been recognized by that. One of the some of the biggest financial publishers around recognizes us and talk about us treating stocks like real estate. Remember, successful investors do something different, and that's what they're doing different is the CSE techniques. The main street followers are the ones that don't make any money or lose money. And that's the majority of the people that you saw. Because everybody knows when you have a big drop like we had the last few days, they're going to come back. The companies are doing fine. Nothing's changed. In a few days does not make the market. But people will run out there and sell their stuff for losses. That's what they do. That's why most financial investors or stock investors aren't particularly that successful, and certainly the mutual funds aren't. I mean, they'll go out there and they'll be just like a kid out of high school trying to invest. I mean, they're just go out there and panic, and their all the programs hit in and they lose money. So let's start off with Randy. And Randy, give us one of those scholarly man about the market views of how you've handled all this and your techniques. And I've never seen you send out so many. Right now, it takes me a lot of time to get all your emails and get them into the Cow Report. That's right. And unfortunately, when they come through my email, they're not like in perfect little shape. There's spaces between paragraphs that don't make any sense, and it's not your fault. Just how they happen to come in. So I have to straighten all that up. So, Grant, why don't you give us your thoughts and then pass it on to Cezanne and Joni?
Well, Keith and I kind of battle back and forth on who can send the most communications out.
That's true.
We try to keep the clients up to date and up to speed on what's going on. I do the covered call platinum service as well as the advanced charting momentum trade platinum service. But I just want to give a plug to Joni and Cezanne. They do the trade the moment platinum service where they're in and out of positions in a few seconds or a minute. And just while we've been on the webinar this morning, I already did a trade the moment, 10% return on SPX, in at $9, out at $9.90. I put the order in just after we started, and it closed 2 minutes ago. So that's Joni and Cezanne teach that. And today is the day that they teach their platinum webinar, where you get to see live in the market while they're actually going through the charts. And it's because of the intraday streaming chart, which I actually have up here right next to your head, Joe, on my screen, that gives us the opportunity to see where is that beginning of that next momentum. And I did a call, so it was the rising momentum, and it's still going up right now.
Let me ask you this, Randy. When you're on the ICE chart, one Cezanne and Joni used, of course they can answer this too. When you have all the gyrations, particularly like last Monday, Tuesday, Wednesday, it hadn't been so bad since then. But all those gyrations, I guess it wasn't last week; it was this week. Forgetting how quick things are moving, and does the ICE chart still show you? Can you rely on that ICE chart when the market's moving so fast to make your decisions?
Oh, absolutely. And because of that volatility, by the time you buy either the call or the put, whichever directions it's going, and by the time you put the order in to sell it, it's already filled. The profit was already there. The premiums are higher right now, so it takes a little bit more capital to implement a position. Like $9 is $900 for a contract, where they used to be like $3 or $4, but still the profits are there. And absolutely the intraday streaming chart, because it's moment by moment plotting right along on the screen, and you watch the crossovers, and it's like boom, there's the place to get in.
So it's even more valuable when you have wild gyrations in the market than it is just what you might say a normal market from the standpoint. You just get in and out quicker.
Absolutely. And to me,
I mean, you can depend on it. You can't, like,
yes,
positions just don't pop up. Like Cezanne and Joni, I don't think had a position today or anything this week because something didn't come up. But it would have shown it if it come up. It would have just closed so much quicker, and that'd be incredible, Cezanne and Joni, because a lot of times they're out like 5-10 seconds.
That's right. And to me, with this volatility and the choppiness of the market right now, that's the technique to use at this point, because you're in and out quickly. You're back to cash at the end of the day. Doesn't matter if the Dow goes up 800 or down 2,000. Back to cash, finished, got your profit. You wait till the next day. That's the technique to use in this hugely choppy. When the market's up 500 points and in an hour later it's down 500 points, what else can you do but trade the moment? Trade the moment's a perfect technique.
Think of all those TSSs, and you and I talk about this when we do the seminar. When the stocks are going, you've done TSS, and the stock all of a sudden keeps going up, and eventually you have to do that adjustment buyback.
Right.
You imagine there probably a lot of our clients had those things up there and hadn't done buyback, and then just like a hand came down from God and just wiped, made them huge profits on the buyback on those those
yep.
actions.
Now that's a little more challenging because the market is changing kind of on a moment's notice. Somebody says something on TV or sends out a tweet, or someone says something in Europe or whatever, and the market reverses and just changes right now. It's really, really crazy. But Joni and Cezanne, everyone needs to be following Joni and Cezanne right now.
Yeah, let me put in a little plug here on it for if anybody wants to call in. Our phone number is 214-377-1108. 214-377-1108. And if you want to call in and discuss this or talk about one of your trades or ask Cezanne, Joni, or Randy about anything, go ahead and do it. You can also email us at podcast, compoundstockearnings.com, podcast at compoundstockearnings.com. And if we don't get to address your email today, we'll do it next Thursday. But we will address it anyhow through the email channel, so you don't have to wait till next Thursday. But we'll address it during the regular podcast. Go to our website, compoundstockearnings.com, and sign up for the Cal Report. It's free. It's been published now for 17, 18 years. And comes out every Friday. It's dated on a Saturday. You get Friday afternoon, and it's free. And if you really want to know what people are doing, people write in questions, and our people here answer those questions. And they write in how they're doing, their trades. And it's just a fantastic vehicle to use to find out what CSE is all about. And at our website, compoundstockearnings.com, you can check and see about Randy's services and Cezanne and Joni's keys, all the things we do, any seminars we have planned, and dates coming up, where they're going to be, what times, and so on. Okay, Cezanne, Joni, now y'all take and give us your thoughts on what Randy was talking about.
Well, Randy's right as far as it's good to not be just in the market, just waiting to see what happens. But as far as our teaching the charts, which is what our primary goal is, it's been a little bit challenging this week because, I mean, the tick is just kind of flying all over the place. So it's not necessarily staying in range for us to discuss what it's doing in relation to how the indicators are predicting it might move. So it's kind of like a wild goose chase or a runaway car. But it's definitely been a learning experience this week and last week with the VIX has, I guess, been high. So all the option prices are higher. And we've had a lot of good examples of when to stay out of some positions, especially with the first, hour or so of the market when everything is even extra erratic these days, it seems. So, it's been a different couple of weeks for sure for us.
Okay. Jody, what do you have to say?
Yeah, I think Randy's absolutely correct, particularly as the volatility goes. This week, what we have found is the option pricing is so widespread. So even when an opportunity presents, and there's been plenty of opportunities this week, when an option price is more than 2 or 3 cents, like for the Qs, which is an exchange traded fund that I trade, when it's that wide, you can't get in. All you can do is kind of sit on the sidelines. So it's been great volatility. It's been great swings, just like Randy said. Just haven't been able to get a trade out because of the option chains presented.
Yeah. Randy, I've gotten a bunch of emails that be in the Cal Report this weekend of people and the returns they've made using your techniques, the momentum trades, and Cezanne and Joni's trade the moments. And they've made these returns during this crazy market. And you just mentioned the trade you did, I think, since you've been on this podcast. What was your return on that trade?
10%, in at 9, out at 990.
10%. That's 10% in a few minutes. Think about that. That's 10. You have these bankers, particularly Wells Fargo bankers, that can't do anything anyhow, and they work all year to make 2 or 3%. You think of all the money they have to lose during the course of a day making transactions to only make 2 or 3% a year, and you made 10% in a few minutes. Like Cezanne and Joni, they haven't done a lot this weekend, but because of the volatility in the markets, but they'll make 3, 4, 5, 6, 7, sometimes 9% in just a few seconds. And in theory, you could just walk away and go home. If you were a broker in a $1 billion fund and they made 10% today, they would send you home, say, "Do not come back. Here's your bonus. Come back a year from now. You did fantastic. You're the best fund on the street." And that's what you guys do. And that's why it's so important to learn these techniques. And so those are my thoughts. If nobody go ahead.
The stock market pundits this week, they're trying to tell you why the market has been so erratic and why it's been dropping. They said it was because the 10-year Treasury went from 2.74 to 2.85% return, and that caused everybody to move money out of the stocks and into the bonds for 2.85%, and that's for a whole year.
Yeah.
That's what's crazy, that people would think that 2.85% is a great return. Well,
and that's Main Street thinking. And when you look at the returns of all the mutual funds, you look at the ones, particularly CalPERS out there in California that manages all the states funds out there, municipalities and such. I mean, they don't make anything. They don't make anything, and people follow these people. Like if people think, "Oh, Merrill Lynch, fantastic. Oh, this company's that, whoever's good," and they don't make any money. It's because they don't take enough interest in their own finances to just learn something. Like I say, successful people in the investment market today do something different. they don't do what everybody else does, because everybody else doesn't make any money. And that's why it's so important. Anyhow, if anybody else has any more thoughts, I do want to recommend it. Google the miniature hamster ordeal. And I'm going to go back and read it again. I'm going to actually carry it all the way through and find out if she did actually flush it down the toilet.
Must have been United Airlines.
No, it was Sprint.
Oh, Sprint. Okay. I've never flown on Sprint before. So
yeah. Well, United's not much better. When I escaped.
Spirit Airlines.
Oh, Spirit Airlines.
Spirit.
Yeah.
What'd I say?
Sprint. Yeah, Sprint's a phone company. Spirit is the airline. All
I got to say about United Airlines, I did get out of Puerto Rico with my friend Stan, who I just met, that lived close to me. And he got me a ticket out of there. Otherwise, I was going to be down there forever with American Airlines. And the plane was a great big, one of those great big 777s. And it had, when we hit Chicago, we landed in Chicago. We didn't hit Chicago. When we landed in Chicago about 2:00 in the morning, everybody had to not get out of their seats, because they had all these victims that were in bad shape to get off first. And I don't know what door they took them off of, but I never saw one come by. I was in first class. Not one single victim came by. And so I'm not real sure that they really had those people on that plane. I think they left them at the airport. As United Airlines. I mean, give me a break, right? They're the ones that, I don't know. Yeah. Okay. Well, if nobody else has anything, well, Marcus, thank you very much for taking care of things and making all this stuff work. Dirk will be back next week, and we'll all be back. And send us some emails and attend these seminars. Check out compoundstockearnings.com. And we'll see everybody next week. Thanks, everybody.
Thank you.
So long. Goodbye.